Great, thanks, Dave. Welcome everyone here today. I am going to be talking about how to profit from pullbacks in powerful stocks. Originally, my topic was all about participating in the current uptrend. We are in a bit of a shaky period this week. I shifted things just a little, so we will be addressing both topics, but I did want to make it timely so that you can utilize this information in the current market environment. And as always, the information is going to be relevant throughout time. I use a lot of historical precedent, and my work is very much based on history. So let's go ahead and get started. For those of you not familiar, I have been around the markets for quite some time. I have a lot of experience. I started out on Wall Street on the trading floor at Goldman Sachs, went on to run money for 9 years, 2 billion in assets. And then things got really exciting for me when I joined William O'Neill in Los Angeles. And of course, he's the founder of Investors Business Daily. And I worked with top fund managers throughout the world. And that experience really gave me a very, very sound basis relative to how to look at the markets and, more importantly, how to interpret what is taking shape, and most importantly, how to uncover big winning stocks. So that's what my work is all about. I have a twice weekly MEM Edge report. At the end, you'll be able to trial that for a nominal fee. And I am the founder of MEM Investment Research. Currently, I am with Simpler Trading. And then I also do host a weekly Friday afternoon show on stockcharts.com. So let's go ahead and dive in. What we are going to be taking a look at today is how you can locate the best candidates. Now, the best candidates, of course, are going to be those stocks that are poised to take off and poised to outperform. Again, that's my specialty. And today it's going to have a little bit of a different slant simply because the markets are, at the very least, consolidating. We'll get into all of that. And then precise entry points as your stock begins to lift off and take off. We'll get into that. Also, what technical indicators, what overlays that are highly powerful that you can put on top of your charts that will guide you. And then we're also going to talk about stocks recovering from pullbacks as a candidate. And this is where it can get really interesting given the current market environment. As always, we will be using history as a guide. So super excited here. Let's go ahead and start at what I call the beginning. Which stocks overall, what is the basis and the commonality among those stocks that will go on to outperform the most? We'll talk about that. Again, timing your entry, that's going to be critical. How long should you stay with the stock? It's going to have everything to do with your investment horizon, but there are other parameters as well. I would argue that timing your exit is even more important than that entry. So let's talk about key ways that you can uncover what I call top candidates. Again, these are going to be names that far outpace the broader markets. And in looking at those key characteristics in different ways, you will want to make sure that the stock that you are anticipating or looking into entering, you want to make sure it's in an industry group that is outperforming the markets. This is quite critical. About 33% of your stock price movement, either to the upside or the downside, is going to be affiliated with the price movement of the industry group that it's in. And if you think about it, if there are particular industries that are on the move higher, oftentimes there's very sound reason for that. And you then can drill down within that group. Of course, AI would be an ideal example in the current market. Also, you want to make sure that the stock that you are looking at has a strong recent performance. And by strong, I don't mean you want it to be up 50% before you'll look at it. Strong quite simply means that it is in a bullish constructive pattern coming out of that pattern. So by strong, in other words, it's not in a downtrend. Again, you want to see the stock having a very sound reason for doing well. We'll get into that throughout today's presentation. And then also institutions being involved in that stock can really be the difference as far as helping to propel that stock higher. And I'll share with you ways that you can uncover whether there is strong interest in the stock outside of your interest that would help continue its uptrend. And then you want to make sure that the economy is sound. Is the backdrop in a position to support a continued move higher? I know that's where some of the certainly volatility this week is coming into play relative to inflation and, most importantly at this time, interest rates. So let's go ahead and look at how to pinpoint entry and exit points. So first up, one of the key ways is when your stock does have an advance, you want to be a buyer on a pullback to a key moving average. We'll get into that. You are not paid really in any market environment to chase a stock. So oftentimes that pullback is ideal. And then you want to see volume on that buying. You want to see the volume pick up as it moves away from that pullback, and this is where that institutional support can become evident. And again, it's all about others having a similar strong interest in that given stock. Also, I'm going to be talking about stocks breaking out of or forming the right side of what's called a base. Many of you may be familiar with this, and I'll drill down even further. And then, of course, time to exit. And I did touch on that, how critical that is. If any of you have read Bill O'Neill's book and are a follower of his tenets for the markets, you'll know that that exit strategy is absolutely critical. You can uncover that big winning stock, but if you don't exit in time, of course, you will give a lot of those gains back. So we're going to talk about that exit strategy where you're looking for key support. Is there volume on that selling and other characteristics? So let's go ahead, take a look at the broader markets now. I did go ahead, this is from the close yesterday. I can share with you that the S&P 500 is of course down further today. What you're going to want to keep an eye on, and I'll share with you, let's see if that's my next chart as far as, so for my work as far as overlays and what you want to pay attention to, it's going to be the RSI, that's that relative strength indicator, and I use a service, stockcharts.com. I'm not affiliated with them necessarily, although I do have a Friday show. I view their display as being really superior in the sense that it's simple but powerful. So for me, I am going to pay attention to that relative strength index. I want to make sure it's up above that net neutral 50. And then here's where those moving averages come into play. So for my work, I'm going to use this green 10-day, 21, 50, and 200-day simple moving average. And then the other momentum indicator is called a MACD. That's your moving average, convergence, divergence. And in this case, you want it to be up above that net neutral 0 in positive territory. So again, you're not going to want to put money to work going back to the beginning of that recent bear market where the momentum shifted. In fact, let's go ahead to this next chart and I'll highlight what you are going to want to be on the lookout for relative to a possible, whether it's a correction, can always say potentially a bear market, but more importantly, determining whether your stock is, or the broader markets are still in an uptrend. So what I wanted to highlight is this particular chart is going back 5 days, but the relevance here is highlighting what took place at the beginning of August. And this had me on alert. This was a chart that I shared with subscribers to my report back there at the beginning of August. In essence, using history as your guide, let's take a look at those characteristics that signaled further downside going back into February, into March, and then of course into April. First up is that RSI did go into negative territory, and I'm highlighting preceding or periods when that took place before. That is not the end all. You will want to look for these three characteristics that take place simultaneously. So that close below that key support, which is that 50-day simple moving average, a negative RSI, and a negative MACD. So if we go back to late February, you can see we did in fact get that negative RSI. We had the S&P close below that 50-day simple moving average, and then that MACD went into negative territory. Another item is that if you do see high volume on that selling. So in essence, in the very beginning of this month, we did see the RSI dip into negative territory. However, we did not have the two other key elements take place, but it is a system that you will want to have in mind in taking a look at these markets, making sure that we're not heading for further downside. And this currently is actually, again, the beginning of August. But at this point in time, we do, I believe, also have a negative RSI, certainly in the NASDAQ. So let's go ahead and move through. We are here taking a look at a NASDAQ chart. This is a weekly chart, and it is from today. So very similarly to the daily price chart of the S&P 500, I've marked up this weekly chart of the NASDAQ so you can have a sense when these particular characteristics take place that you could be on the lookout for a lengthier period of deterioration. So at this point in time, the NASDAQ, you can see the RSI is still positive. This is another chart that I shared earlier this month, quite simply because the RSI was very close to getting into an overbought position. Last Friday, it was sitting at 68, and anything above 70 on that RSI is overbought. So that's one of the first key signals. So we did divert away from that. We're sitting at 62 now as of today, Wednesday, the 20th, on that RSI. The second condition on the weekly chart of the NASDAQ is that we had that MACD crossover. That's going to be the black line down through the red, and it is not in a position to take place at this time on the NASDAQ, but you do want to have some sort of semblance of what to be on the lookout for, a guide that's going to help you as far as preserving your profits. And again, everything to do with your investment outlook as far as whether you sell or stay with your stocks. Let's go ahead and talk about identifying leadership areas and sector rotation. And this is also quite critical in the current market environment. But the reason you want to identify what I am calling leadership area is because you want to also, in addition to identifying that key industry group, you want to make sure that you're in what I'm calling a leadership area among the 11 sectors in the S&P, and that is another key component. So combined your sector and industry group weighting of your stock has almost a 50% as far as the impact on your price of the stock. So if the industry group and the sector are in an uptrend, trending upward, again, 50% of your stock's price movement is going to be directly related to that. So hence, super, super important that when you are looking for those big outperformers, you want to make sure they're in a strong area of the market. So let's go ahead and drill down from here. And it might be a little difficult, so I'll I'll highlight what is being shown here. But quite simply, this is a view of the S&P 500 and the 11 sectors in the S&P. So I'm going to take us back in time. We're going to go back and I'm going to show the last 2 months and where we stand currently. So June 18th of this year, if we go back to that time period, and we had already come out of that bear market period and we were doing quite well. You can see this is XLK. In fact, I should share with you that these sectors are sorted by relative strength. So in other words, the sectors, this is a 2-month daily price chart view, and those sectors sitting up here at the forefront on June 18th were at that point in time the strongest. You can see the S&P 500 listed here. So those sectors listed in front of the S&P 500 at that point in time are your leadership areas. And so in that mid-June period, tech sitting up here front and center. We had a very brief move into energy. I talked about it in my report and did not support it. In other words, didn't add names from that area, and the group has since deteriorated. However, heavily weighted in technology and communication services, internet related and otherwise. That was your leadership area. And then down here in your weaker areas were consumer staples, XLP, healthcare, XLV, and then financials. So in other words, make sure at this point in time that you're heavily weighted in those stronger areas and that they are not areas that waffle. You don't want to get into this and start shifting, although I will say the sector strength relative to weakness is a very steady progression. Normally does not whip around, but this is a view from stockcharts.com where very quickly you can access where that strength is among the 11 sectors in the S&P 500. So now let's go ahead a month beyond that. Here we are, July 25th. And at that point in time, you can see the S&P 500 sitting up here, strongest area. And then beyond that, we can see industrials, technology, and interestingly REITs, but among tech and technology, industrials and technology, I will tell you, it was all about AI related names. So industrials, heavy construction, they're building those data centers. Technology, of course, we can talk about semiconductors most certainly, and any other areas that are AI related. So let's go ahead and take a look at some of these weaker areas 1 month out, and you'll see that staples are still down here. Healthcare, these are your more defensive areas. So while we're in that bullish phase, it is going to be those growth areas up at the forefront. So from here, we are looking at a more recent view, and this is taking us to last Friday, and I'm then going to share with you what's shaping up this week. So into the close last Friday, we had internet related names up here at the forefront. Reddit was a big winner. Certainly it was a big winner for subscribers to my MEM Edge report because we had highlighted it coming out of that bear market, and many other internet related names that have fared quite well. You can see consumer discretionary coming into play into last Friday's close, and then healthcare was the #1 group for last week. So this type of view can be really quite powerful as far as putting you in front of what's shaping up, where that strength is, and how you can potentially participate. Let's go ahead and take a look at where we are as of today, Wednesday, August 20th. And take a look at the shift here. You can see we now have XLP, consumer staples, XLV, healthcare, and then utilities. So we have gotten a lot more defensive in the broader markets. And then most importantly is the fact that technology sector is sitting down here as the relatively weakest sector. So we've lost that leadership, and that's critical as far as formulating a plan. And as far as did you want to get defensive, you may. I would wait till after Friday's announcement with Powell, but we are setting up here with a very defensive move. In fact, it's been shaping up over the last 2 weeks. It's something I've talked about in my report. I did not add new names, new buy ideas last Friday or Sunday, quite simply because of this shift that was materializing. So let's take a look at the technology sector. I talked about it being the weakest one this week, and quickly just highlighting you want to pay attention to that RSI. It is now in negative territory. We had a very bumpy period at the beginning of this year where we had that RSI dip, a lot of waffling. But as far as that key component, when the RSI back here in March for technology turned negative, and then when you can marry that with the negative MACD, it's very similar to that view we were looking at with the broader markets. You want to have a system in place to indicate that we could certainly be in for further downside. So we're going to want to see today, do we hold support at this 50-day simple moving average? That's going to be really quite critical relative to technology and any holdings you might have. And then going back in time, taking a look, and again, this is a couple of months ago, the technology sector was the strongest, and we were sitting up here at new highs. So definitely a different look, keeping an eye on this area, because when you lose your leadership, your chances of losses elsewhere does in fact increase. So we're looking at sub-industry groupings. I don't want to get too into the weeds here, but I did want to highlight how you can use ETFs that are highly relevant to the markets and secure a sense of strength relative to weakness in these industry groups. So I'm going to share larger charts next up, but more recently, or actually as of yesterday's close, we had home builders and solar stocks sitting up here at the forefront. And the reason I'm spending all this time on this is because this is where you will potentially want to focus. We also have retailers, XRT, sitting up here, but down here in this weaker area, we'll take a look at a former leadership name, and that is software. So let's go ahead and take a view at a larger chart here. This is XHB, the S&P 500 home builders industry group, and you can see that we are continuing to form the right side of a base, and we have this XHB group back above that 10-day, so this would be an area of interest. We're seeing higher volume on those rally days, the RSI and MACD both in positive territory. Now, the key here is when you're looking at these industry groups, you want to know something about the components. I apologize. We'll get back to home builders. Let's take a look at the secondary area that was sitting up here at the strength forefront, and that is the Invesco Solar ETF, TAN. So let's take a look at this big gap up that took place last Friday, and then into Monday and Tuesday, we had a bit of a continuation rally. Nice volume on that gap up, and then bullish indicators on the momentum side. So the reason that the solar area really came into play is because it was announced that there are less restrictive tax credits than thought, and this in turn really boosted the growth outlook for these stocks. And this is current. So from here, let's go ahead and take a look at a weekly chart of the Invesco Solar. And you can see we're seeing that nice high volume RSI. So this bodes well for the longer term outlook if you're looking at a weekly chart. However, if we go back to these prior periods, you will see that we've had what I call head fakes. We've had these moves back above the shorter term moving average, RSI turns positive, but there is a differentiator relative to those earlier head fake turns. But let's go ahead and look at a name that was a big winner. It actually was, I believe, a $4 stock when it broke out, but this is Plug Power, PLUG. This is a name that I owned, and it was, it did eventually go up 400% from this base breakout. So PLUG is a big solar stock, and of note here is during this June into July period of 2020, very similar to the current environment. And Trump was at the helm at that time as well, where there was a solar reconciliation bill from the Republican Congress, and it actually had everything to do with solar taxes and being less harmful than originally thought. So this is where you're going to use history as your guide. PLUG will look at the overall group as well, but knowing that when these stocks come into their own, there is in fact that ability for them to continue to trend higher. So the other concept I did want to share with you is that if you are an investor and you are not a day trader or a swing trader, you have a longer term horizon, perhaps you're saving for retirement, you will want to have a strong ability to use a longer term chart as your guide. You won't get shaken out quite as much. So I'm going to have an example here. This is Palantir from today. We're going to see certainly, of course, where we close, but the stock is in its 6th day of negative returns. We're seeing very high volume on that selling, so not very good news. You can see the RSI is now negative, and then we had a negative MACD crossover. So again, using historical precedent, this is that bear market, February into March, and very similar characteristics, but that 50-day break was one of the key components. Also, the broader markets performance was also critical. So this is your daily price chart. Let's go ahead and pull up a weekly price chart of Palantir. This is that longer term chart that I talked about. And you can see this is that recent bear market. Palantir lost over 45% in that bear market. Pretty significant. But as part of my work with my MEM Edge report, I did keep it on the long-term buy and hold list. I held on to it personally. And the reason is on the weekly chart, you can see this RSI, it got to that 50, but it did not close below it. Your MACD did trend lower, but we remained above that net neutral. So using a weekly chart can help you keep you in some of these bigger, longer term winners. So let's take a look. This is a current chart. I believe part of the assignment today was to provide a couple of idea stocks, but the reason I wouldn't jump into tech quite yet, but the reason this particular name caught my eye, it is Seagate Technologies, and it is a data center related stock, networking name. And most importantly, as looking at this chart, this is into yesterday's close, is the fact that it is sidestepping selling taking place elsewhere in technology. We are sitting up here quite nicely while technology overall is deteriorating, and they are due to report their earnings next week. That's certainly notable, and we are in a position to potentially advance should those numbers fare well, should the markets straighten up. But it is a name that for your watch list, no doubt. If we can get that base breakout with a black line up through the red, it would be quite constructive. And of course, marrying that with a bullish bias in the markets would be ideal as well. And then also you do want to infiltrate and use economic data to help guide your decisions. And I talked about interest rates, and certainly home builders are going to be really quite responsive to that, and then also generally the broader markets. So I'm bringing this to the table because on Friday we have a critical speech by Fed Chair Powell, and it is going to address potentially his interest rate persuasion going into the September interest rate decision. And we've seen this is his Jackson Hole annual appearance, and I've seen this speech move markets in the past. So it is, I feel, really quite critical. I wanted to point out to you the view that we are looking at here is this black line is the S&P 500, and then the bar chart area is interest rates. So quite simply, going back, this is a chart going into last Friday. Let's go ahead and take a look. So quite simply, as interest rates rise, you will see overall the broader markets decline, and technology will tend to get harder hit. So as the interest rates began to descend, this is taking us into November, into actually the year on this is 2023. But more importantly is the fact that quite simply, as interest rates decline, you will see a general uptick. Now, of course, there needs to be other areas of the economy doing well and other backdrop items, but it is safe to say that the direction of interest rates is highly impactful. So you're going to want to keep an eye on that. So I talked about this Friday, Powell's speech, the importance. Here we are with a different view. The bar chart is the technology sector, and then the line here is interest rates. So you can see as interest rates were getting elevated, this particular period preceded the most recent bear market. More recently, we've seen a general, in fact, this is the yield on that 10-year treasury, and it's down again this week, interestingly. And so you can see the markets charging toward a new high. This is into last Friday's close. And again, as interest rates decline. So it's another element without getting too heavy duty, but it is something definitely worth putting in your list of to do as far as what to keep an eye on. So here we are looking at technology XLK into last Friday, and it has been the top performer going into this week, technology stocks, and oftentimes coming out of a bear market. That first group that exits is going to be your leadership area. So we've certainly have seen that in technology, and then this is again into last Friday. It's going to be a different view today. Semiconductors were the leading sub-industry group within technology. And again, one of the first groups out, very constructive base formations, bullish MACD crossover, so a lot of positive things until this week. Put a dent in that, but it is what you want to be on the lookout for. And talking about exit, I mentioned how critical it is to have an exit plan. We're looking at Advanced Micro AMD, and this is going back to 2024, but more importantly than the date is going to be the characteristics. If you own a stock and it begins to deteriorate, when do you hit that sell button? Well, again, it's going to have a lot to do with your investment outlook. Do you look at a weekly chart? But most impactful here and for any stock is when the stock breaks below that key 50-day simple moving average coupled with a negative RSI, and we have that shift in momentum with the MACD, the black line down through the red. That is going to be your key sell point. Going back historically, the stock has pulled back to its 21, just below the 21, but once you get below that 50-day, that's going to be your sell signal. Here's Broadcom, another big winner among several that were added to my MEM Edge suggested holdings report coming out of this April period. And we can see what those common characteristics are among these leading stocks. And it doesn't have to be coming out of a bear market. It can be during a standard market period. But in this case, it was one of the first names that turned bullish. It broke back above that 50-day. We have a positive RSI, positive MACD, and then we entered into a nice uptrend. But with my work, I'm also going to be very thorough as far as making sure that the stock has that backdrop, that growth backdrop. And AVGO is very involved in AI, and hence their growth prospects were really quite strong. Now, I did mention this, software stocks are struggling. There's a very good reason for that. I've been talking about it in my report. And quite simply, AI, where it is being used to benefit certain industries, it is negative for the software space, quite simply because there is an ability, given AI's capabilities. There is an ability for new software companies to come to market very quickly, and so it's going to create a much different competitive landscape, and you are seeing that in this weakness. This is IGV, the Expanded Tech Software Group, and you can see that we are now down below that 50-day. We have a negative. This is something I highlighted 3-4 weeks ago, the negative RSI. We did exit most of our software stocks. Again, paying attention to that group that your stock is a part of. I'm going to kind of go through because I'm getting a little close to my time being up, but here we can see Snowflake. This had been a big winner, but once we broke that 50-day, and again, this had been part of the MEM, my suggested holdings list. Once we broke that 50-day on volume with a negative RSI and MACD, we removed it from the buy list. Flat bases as a way to identify a stock poised to outperform. This is MHO, a home builder stock. Again, using history as your guide, we're going back to 2023. Wingstop was another big winner for my MEM Edge report. We identified it breaking out of that flat base, super big volume, bullish RSI and MACD, and it was all about earnings growth. So here we are with a current stock for your watch list. It is Comfort Systems, FIX, and you can see that it is not participating in so much in that bear market. It's pulling back nominally, forming a nice base formation following a gap up on earnings. So when those market pressures lift, we can anticipate that we could easily experience another leg up. This is another current chart that's sitting up here quite nicely. Urban Outfitters also exhibiting a nice flat base, but they are due to report their earnings next Wednesday. You'll want to keep that in mind. The RSI is now negative, but this is the kind of searching I would do in this environment, names that are holding up well. And let's go ahead, because a lot of this, I talked about Reddit being a big winner for us. We picked it up on that base breakout. Let's go ahead and take, I did share with you this Plug Power when, again, it was a Republican Congress. And I just am going to, if you can bear with me, I'm going to cycle through this. The concept that often leadership names do have periods of reconciliation and consolidation, and then they go on to lead again. So I am going to, I guess I came almost too prepared. So let's take a look at how you can screen for candidates. You will want to, at this point in time, this was developed before the current market situation, but ideally you want to exhibit and look for names that are in a leadership position off of their recent high in price, and also above that key 50-day and above that 10-day simple moving average. I don't know if I have time for questions, but I did want to share with you, this will be in the chat link, the ability to trial my twice weekly MEM Edge report for 4 weeks. No obligation beyond that, and simply use that link to go ahead and get on the trial list. And I would certainly look forward to that.